This is my guide to invoice finance. Now, I've written a full guide which you can find on our website. There should be a link in the description below. Invoice finance is often referred to as receivables finance. The terms are often used interchangeably. There's another word that you might hear, factoring, which is also used to describe a type of invoice financing service. Now, what do we mean by receivables finance? It's a way to borrow money against outstanding invoices that you've raised to your customers on credit terms. Now, if you raise an invoice for products or for services that you've provided, often you don't get paid straight away. Typically in the UK, somebody will grant their customers 30 days credit before they have to pay their invoices. Now, that can be quite a significant delay which can affect your cash flow. So what receivables finance and invoice finance does is it allows you to get what we call a prepayment against those invoices. Now, the level of the prepayment can vary. It can be from about 70% of the face value of the invoice up to 100% of the value of the invoice. It depends on which sectors you operate within, and it depends on the types of debtors that you're dealing with. So what do people say about invoice finance? Well, we've done some research and we've spoken to people that are using these products already, and in 98% of cases they said they would recommend invoice finance to other businesses. So you can tell that those customers are pretty satisfied with what they're getting. There are a number of different providers in the UK market that offer these services. At the minute there's over 100 that we've identified. They're split into two broad groups. First of all, you've got the ones which are what we call bank owned. So these are part of the high street banks that you'll know and recognise. There are also a number of independent providers. Now, these may be small businesses, but that's not necessarily the case. Some of them are very large businesses, but they're independent. They're not owned by a bank. Sometimes there are benefits depending on which route you go down. A bank is perhaps able to offer very, very fine rates on large volumes of borrowing. You might find with an independent company you can get a very good service if you're looking for something like credit control to be provided in addition to just the funding. So different types of provider, so you need to be careful about that when you choose who you're going to go with. Now, there are some key benefits that you can get from using these services. The first one is an improvement in your cash flow. So because you're no longer having to wait for your invoices to be paid, that cash is freed up and it's available within your business. So that can improve your cash flow and allow you to pay your suppliers more quickly. The second thing is a boost of working capital. When you first start using an invoice finance facility, it can release a prepayment percentage against all the invoices that are currently outstanding. Now, that can be a large chunk of cash that's released all at once. In some cases, customers have used this for things like helping to fund acquisitions. The next important benefit is that it is far easier to qualify for these products than it is to qualify for other sources of business finance. Now, the difference is that invoice finance is based on the strength of your debtor book, the customers that you're selling to. It's not based on the financial strength of your business. Now, this means that you have a far better chance of qualifying for this than you would for other types of finance, for example, loans. The next benefit is from credit control. Now, this isn't a service that you have to have, but it is included with some products, and these are the products that we call factoring. That means that somebody else is doing the credit control for you. They're making the calls to your customers and sending out statements to chase up payments. Now, that can be a big burden on your business. It can mean you've either got to employ credit controllers or you've got to do the task yourself. So by having that outsourced to someone else, you can save a lot of money. And that can be offset against any fees that you're paying for using the service. The last thing is there are various other options that cover all sorts of different add-on services that you can have with an invoice finance facility. Things like dealing with your exports. You can pick and choose invoices, or you can have the whole lot funded. So there are various different product flavors that you can have. They're covered in another video separately. So invoice finance, essentially releasing cash against your invoices and giving you access to additional services should you need them.